Ladies and gentlemen, good day and welcome to SG Finserve Ltd Q2 FY25 earnings conference call hosted by Motilal Oswal. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star, then 0 on your touch-tone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Raghav Khemani from Motilal Oswal. Thank you, and over to you, Mr. Khemani.
Thank you. Good morning, everyone. Thank you so much for joining in. To discuss the earnings, I am pleased to welcome the senior management team represented by Mr. Saurabh Dhawan, Chief Executive Officer, Mr. Sahil Sikka, Chief Operating Officer and Chief Financial Officer, Mr. Anubhav Gupta, Group Chief Strategy Officer. We will have the opening remarks from the management, followed by Q&A. Now I hand over the call to Mr. Anubhav Gupta, Group Chief Strategy Officer, to take the proceedings forward. Thank you, and over to you, sir.
Thanks, Raghav. Good morning, everyone, and thanks to everyone for joining on this Q2 FY25 earnings call for SG Finserve. This is the first ever investor call which we are hosting for SG Finserve, and I would like to thank Motilal Oswal to host us for this. As this is our first call, I will also like to introduce the key team from SG Finserve as we start the call. So I'd like to introduce Saurabh Dhawan, who is the CEO of SG Finserve. He has 18 years of corporate lending experience, and he has worked with renowned banking firms like Kotak and Aditya Birla Finance. Sahil Sikka, who is the Chief Operating Officer and the CFO. He also has more than a decade experience and has worked with renowned firms like Kotak, Aditya Birla and SDFC Bank. Abhishek Mahajan, the Chief Risk Officer, having worked with IDBI, ICICI and Kotak Bank. Ankush Agarwal, who is the CISO and Chief Experience Officer, heading Automations and Technology. Vivekanand Tiwari, who is the Chief Compliance Officer. Renu Rai, who is the Chief People Officer, heading HR and Admin Department. And Ritu Nagpal, who is the Company Secretary and Compliance Officer. As we start the call, I would like to highlight that why our group APL Apollo got into this business around 2 years back, and what we have done in last 2 years, and what is the vision on the table for next 2.5-3 years. So as you all know that APL Apollo Group has a massive experience in the manufacturing sector. We run 2 manufacturing companies, Apollo Tubes in the steel pipe business and Apollo Pipes in the PVC pipe business. We deal with large number of distributors who are our direct channel partners. In Apollo Tubes, we have around 800 direct selling partners. And in Apollo Pipes, we have more than 600 direct selling partners. So we thought that having worked with these partners, we identified a massive gap in the industry, which is the lack of working capital for these SME traders, which restrict these SME traders from growing their business rapidly or at the same pace of the brand or anchor with whom they are associated with. So we thought of starting SG Finserve as a one-stop supply chain funding company. And in October 2022, we raised 720 crores as a pure equity, wherein the promoters infused 50% of this, and the rest 50% came from the external investors. This was pure equity which we raised without any instrument, and then we started the lending business. So the initial target was to address the group channel partners associated with Apollo tubes and Apollo pipes. And we were of the clear view that once we introduce this product in the market, we will be able to attract other large or equal size of other anchors and other brands, other corporates. I'm glad to share that today we are, apart from Apollo group set of distributors, we are working with renowned groups like JSW, Vedanta, Tata Group, Oppo Mobile, Nivea Cream, Kajaria, Havels, etc. And we were fairly confident that this business model should work because as everyone understands that there are big set of banks which are addressing this market, but there is a big gap what we see, and this got we became more confident during COVID 2021 financial year. I'll tell you how. During COVID, APL Apollo moved to 100% cash and carry business, right? We stopped giving or offering credit to our distributors from April of 2020. And against that, we increased the cash discount from 1% to 2% for our distributors. So that was like an incentive for them to move to cash and carry. In Apollo tubes, our distributor normally churns his capital 7 to 8 times in a year. So if he gets 2% cash discount, he will be able to earn at least 15 to 16% extra by the end of the year. And for him, the borrowing cost could be 9, 10, 11, 12%. So still he would end up making 3-4% extra profit, right? If he moves to 100% cash and carry as per APL Apollo policy. So most of our distributors switch to this model, and as we all know that Apollo's debtors days reduced from 25-30 days to 5-6 days, and it was going pretty smooth. But what happened during those like initial 1.5 years was that some of our distributors were leaving this 2% cash discount. So that came like a surprise to us because how can anyone leave 15-16% discount, right, in 12 months? So that means he was not able to raise money from banks or NBFCs, so-called fintechs, even at 12-13%. So that's where we saw a big gap in the industry, and these were the distributors whom we have been dealing for last 20-30 years. We have not seen even $1 of default from them. But banks were not ready to fund them, right? So that's where our belief became stronger that there is a big gap in the industry, and we should address this. So that's how the idea of Finserve came into picture, and we capitalized the company with 720 crore of equity with AA rating, which the credit rating agencies gave to us. And in October 2022, we started disbursing the loans. To our own surprise, from October 2022 to April 2024, our loan book expanded to almost 2,000 crores. And we almost disbursed 30,000 crores of gross loans during this year, with average repayment cycle of 25-30 days. And all other large anchors, large groups, large corporates, large brands, they kind of welcomed our solution, and that's how we grew our loan book. So the focus is that we should be able to grow this loan book to around 6,000 crores by FY27 with targeted ROA of 4% plus and ROE of 18 to 20% with NIMs of around 6 to 6.5%. And here the universe is number one, the group's own channel partners, right, which could be doing 25-30% of the business. Then other large opportunity what we see is the retailers who are associated with our distributors. So our distributors do business of around 50,000-60,000 crores in a year, and 1 month credit cycle with their retailers is around 5,000-6,000 crores. So our distributors have given 5,000-6,000 crores of loan to their retailers, right, in the tier 2 value chain. And this is also we can address because these retailers are associated with our distributors for decades now, selling steel pipes or PVC pipes. And we will switch from distributors to their retailers, where the interest rates will also be higher. Right now we are at around 12.5 to 13% on an average, but once we move in the tier 2 chain, the interest rates will also become higher. Plus, we will, as the team is working day and night to get large anchors enrolled on our book. For example, Vedanta, Tata, JSW, Jindal Group. All such large groups have also given their in-principle approval, wherein we can do business with their distributors and vendors. So all in all, we are pretty bullish on this business as a group. That's why we also infused another 450 crores last month, which were in form of warrants. So as the company grows its loan book, the money will come in form of capital and will infuse further growth. So the current net worth of the company is 856 crores, out of which 716 was the capital infused initially. And with 450 crores coming in over the next 18 months, with net worth increasing on the back of accumulated profits, so we see around 1,500 crore of net worth by FY27, and doing 2.5 times leverage on this net worth, we should be able to increase our loan book to 6,000 crores by March 27. And we are confident that we will be able to achieve desired ROA of 4% plus, ROE of 18 to 20%, with NIMs of around 6 to 6.5%. And out of the 6,000 crores, the group exposure will not be more than 35-40%. Rest 60% will be outside group, the other large or equal size of anchors and conglomerates. So that's it from me. And now I would like to invite Saurabh to give details about the business model. Over to you, Saurabh.
Thank you, Anubhav. Good morning, everyone, and thanks for joining today's investor call. It is an extreme pleasure to address you today as the company grows from strength to strength. As rightly mentioned by Anubhav, APL has given us the runway to set the way forward. With the new anchors joining our hands, we look forward for a bright future. At the outset, I would like to start with what do we do. Our financing solutions are crafted to benefit both large corporates and the MSMEs. For the MSMEs, we all are aware that it is a struggle to access formal credit. Only 10% of them have access to formal credit. So we help them get financing. For the large corporates, we help them to make the balance sheets more leaner by reducing their debtors. How do we operate? We identify the large corporate, get into a discussion with them, sign up an MOU which carries all the broad terms and conditions. Once the terms and conditions are carried, we get qualified leads of the dealers through them. The dealers are approached, they are onboarded. So these guys often, the terms are fixed with the large corporates. It is all technology-based solutions that we provide. We will get into the entry of the SAP of the large corporates, and all the invoices will flow from the SAP of the anchor to us, and we will be sending direct financing to the large corporate only. We do not send out any funds to the dealer. So this helps us to control the end use of funds, which is key aspect. If I'll highlight what is our niche in the banking landscape, what is our right to win here? The large banks hover in the space of 9 to 11%, and their risk appetites are little lower. They're looking for lower risk profiles. Large NBFCs, namely Aditya Birla, Hero FinCorp, Tata Capital, which operate in the supply chain financing, or Cholamandalam, they have interest rates in the range of 11 to 13%. But in terms of technology, in terms of appetite, it is still limited. New age NBFCs and fintechs operate 13% and upwards. For us, it makes a space very clear that we operate between 11 to 13% of ROIs when it comes to distributors and dealers. So we have found our niche space in the entire supply chain financing field. Very importantly, we have the right team in place. All the departments are created, which is always key for a long-term outlook of any company. So our existing employee strength is about 61 individuals spread across 14 states. So we have coverage in all major states of the country. Three key focus remains on technology. So we have already implemented a fully integrated loan origination system and loan management system that significantly enhances our operational efficiency. The systems are connected to income tax portal and the GST portal, allowing us to obtain crucial information to support our credit decision-making process. Additionally, our LOS and LMS is now integrated with banks like HDFC, Axis, Yes Bank, ensuring real-time updates on collections and automated payments. Further, we are developing certain proprietary softwares in-house, which include scoring and rating model, which helps us to credit assessment on new customers. This model provides us insights into financial health of prospective borrowers and is customized based on the specific requirements of each anchor. So it is each anchor specific rating that is done. Then we have AI-based monitoring tool, which is linked with the GST portal. It is under development, wherein we will be monitoring the operational nuances of the borrowers on day in, day out basis. Number 3, we plan to launch our 24/7 banking from the next calendar year onwards. That means we will be operating 24/7, and even at 2 a.m. in the night, if the invoice is created in the large corporate's factory, we will be sending them money by 2:30 a.m. So we want to be one of the first NBFCs to have 24/7 banking. So these technological advancements position us to operate efficiently while delivering enhanced services to our customers, reinforcing our commitment to innovation and excellence in supply chain financing, which has been the key focus of our company. I would request Sahil to take us through the detailed insights on our target performance for future peaks. Sahil, to you.
Thank you, Saurabh, for the insightful overview of the company and its vision for a promising future. Good morning and a warm welcome to everyone to discuss the future prospects for SG Finserve Ltd. We closed our H1 FY25 financial year at 822 crores. Currently, our loan book stands at 1100 crores. We expect to close the financial year with a loan book of 2500 crores, and achievement of the same will be strategized through 1. Addition of new anchors, that is the large corporates with whom we formalize the MOUs, and penetration of existing anchors. We have already established partnerships with marquee large corporates including Tata Group, ArcelorMittal, Vedanta, Ashok Leyland, JSW, MG Motors, APL Apollo, Adani, and Oppo, etc. So we are majorly covering all the important sectors that are there in the market. These are all market leaders in their respective fields. We have strategically chosen to focus on fast-moving items from well-known brands and large corporates to support our growth for next 3 years. In this segment, systems are more formalized, ensuring greater capital security for us. Some of the large names have been added in last 6 months. Thus, new business from these new anchors recently added by us, like Adani, Ashok Leyland, ArcelorMittal and MG Motors, etc. And lastly, growth is also envisaged from the existing borrowers, being a working capital nature of product so growth is envisaged from existing borrowers as well. Additionally, we have also strengthened our board. Our current board constitutes of 3 directors, Mr. Kamath, ex-ED of Canara Bank, Mr. Dugbandhu Rath, ex-CGM SBI, and Mrs. Asha Agarwal, ex-Principal Chief Commissioner, Income Tax. In our last board meeting, we have appointed 2 new senior directors to further strengthen our board. Mr. Jagan Mohan Rao, ex-Principal CGM of RBI with 33 years experience, having worked with RBI, ex-director of Poonawalla FinCorp, and currently director with Samman Capital, India Bulls Company. Mr. Shekhar Masoor, ex-Chief Risk Officer of Aditya Birla Finance and currently director with Standard Chartered Capital Limited. The strengthening of our board will ensure a regular guidance in maintaining highest quality of compliances and lay a robust path for future growth of the organization. Now, when all the cogs in the wheel are aligned for us, what is the way ahead? We target to achieve a loan book of 2,500 crores in FY25, 4,000 crores in the year after, and 6,000 crores in FY27 with a target ROA and ROE of around 4% and 18% respectively, and NIM of around 6%. With the expected ramp up of our loan book in Q3 and Q4 of current financial year, we are expecting a much higher run rate for the way forward. Now, I would like to open the floor for any questions you may have, and we would be happy to address the same. Thank you.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question.
Operator Anubhav here. Just 2 additional points I'd like to highlight before we open the floor. So one is that since it's a third business in our group after Apollo Tubes and Apollo Pipes, we started this business as a listed company because from day one we wanted to maintain highest governance standards. This company, when we started, it had like a great set of investors who had funded this venture initially along with the promoter family. And it had its own independent board, independent management, separate office. And APL Apollo or Apollo Pipes, none of the group companies has given any corporate guarantee or anything to start this business. And secondly, for the distributors, SG Finserve is like a fifth option. Okay. Right now, the distributors would be doing business with either national banks, private banks, or they would be doing business with the NBFCs. Then there are fintechs who are also in the market. So SG Finserve offers a unique solution in terms of convenience, in terms of the interest rates, in terms of the technology which we are providing. So for our group distributors, SG Finserve is just like a lender, right? And it's on their discretion to decide whether they want to do business with SG Finserve based on the interest rates, based on the convenience, based on the technology platform which SG Finserve offers. So it's a fair play in the lending business for our distributors. Now, Mr. Moderator, let's open Q&A. Thanks.
Thank you. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and one on your touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and two. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question comes from the line of Sauresh Pal with KRSP Capital. Please go ahead.
Yeah, thanks for the opportunity. Sir, my question is, sir, what we will be doing to ensure our asset quality? Because in lending business, asset quality is the main thing. Because growth, it is very easy to, in lending business, growth is very easy to show. But what is important is asset quality. So that's my question, sir.
Yeah. Thanks, Suresh. Asset quality is extremely important for us and any financial institution. We completely agree with this. Till date, we have onboarded almost 700 plus customers and disbursed about 30,000 crores through our counter. And we run with a track record of nil NPA. What do we do to ensure is, A, at the time of onboarding, we've already built our rating and scoring software, which helps us to easily identify which cases to do or not to do. B, we also keep a lot of focus on monitoring tool, which is also under development. And right now we monitor all the customers manually. So the focus of the team is to build a robust long-term quality book. Each of our borrowers have paid us at least 8 to 12 times over the last 2 years. So we have seen that all the loans which have been disbursed have come back to our counter and been disbursed again at least 8 to 12 times for each of the borrower, being the nature of this business. I think the asset quality over the last 2 years speaks well of the kind of book and the kind of work that is happening in the company. Thank you.
Very from my side.
Thank you. Next question comes from the line of Narendra from Robo Capital. Please go ahead.
Hi, sir. Thanks for the opportunity. Just wanted to understand what gives us the confidence of growing six times from this space in the next 2 or 3 years, right? So, do we have a kind of pipeline in mind? And just to understand that, also another follow-up question: how many anchors do we have right now, and how many do we plan to onboard in the next 2 years? If you could say something.
Okay. Thanks, Narendra, for your question. 2 questions. A is the confidence that the team has to grow from 1,000 crores to 6,000 crore, and what is the number of anchors. Both the questions I will address together because our confidence is backed by the anchors that have been onboarded till date. This includes, as we mentioned, names like JSW, MG Motors, Tata Group, Adani Group. So we are one of the first NBFCs to be onboarded for Adani Copper Kutch, which is coming out with a 5 lakh 10 facility of copper. Then we've got Ashok Leyland, APL there. Very important aspect, the differentiator between supply chain financing business and other NBFCs business is that our business is working capital in nature. We do not have repayment, so we do not have a reduction in books. If the industry is going to grow by 20%, if today our book is 1,000 crores, on steady state basis, if the industry grows by 10 to 15%, our book is going to increase to 1,150 to 1,200 crores. That means there will no repayments happening in our book. It is going to keep growing as the industry grows. The number of anchors that we have onboarded today is about 37 anchors. We have a target list of about 35, 40 very large names in the industry, and the existing ones are also running supply chain financing programs of thousands of crores. For example, a Tata Motors in itself runs a supply chain finance program of about 6,000 to 7,000 crores, and we've just started with 150. The scope for us is pretty large, even if we are able to do 5 to 7% penetration in that anchor. and similarly for a Vedanta or a Adani.